You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done for professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Yeah, good afternoon. Welcome back. Today is Monday. You probably figured out it's definitely Monday. 5th day of August, 2019. Thanks so much for joining us today. Whoever you are, wherever you are, we're just glad to have you right here, right now. Before we get rolling, just take a moment here and pause for the senseless tragedies that took place over the weekend. Not a lot I can say that you've not already heard. Our nation is in a struggle. Our people are in a struggle. The division, the anger, the angst runs deep. And at a time like this, there's nothing more powerful we as believers can do than pray. So I encourage each and every one of you to spend a little time doing that today. A little time in prayer. Talking to God, asking Him, what can I do? We need your help, God. Please don't turn from us in the hour of our need. Show us how we as a body of believers can work together to get this great nation back on the path that I know you want it to be on. We've turned from you, we've strayed from you, we've pulled back from you. On 9/11, that tragedy brought a lot of believers together. Churches were filled to capacity for weeks, and then they weren't. God, we just pray for your mercy, for your grace upon this country and upon your people. We pray for the families of those who are left reeling right now, trying to figure out what happened, why it happened, and how they're going to put their lives back together. I pray, Father, they turn to you, because they'll find no answers from man. Let us all turn to you. Amen. All right. Just got to pick up and move on. That's all we can do. All right. Welcome to the show. I think we covered that. Big night. My goodness. If you're on the Logic 247 trial, congratulations. Those who became passport holders over the weekend, great first day on the job. You did good. I'm serious. Now all you got to do, keep your shoulder to the wheel, keep your nose to the grindstone, keep your, that sounds painful, right? Nose to the grindstone. Keep your emotions tied up out back. Stick with us, because we're going places. You can see what happened here on the S&P 500 E-mini. Let's jump to a daily chart. Take a peek at that. Okay. Now I'm going to take these fibs off for a moment so I can put them right back on. Dramatic effect. Now, last week, I pointed an arrow right there, and I said, this is a really important area. We had a bearish cross May 13th. We had a bullish cross June 12th. Make that June 13th. We just put in new all-time historic highs in the S&P 500 E-mini Futures. We've been waiting on a pullback. We said the shallowest place for price to pull back at this point would be to the BBC, and it did. Gave us a beautiful bounce, so much so that it went back to actually put in yet another all-time historic high. We then pulled back on Thursday, make that Wednesday, Fed day. Today's Monday, there's Friday, Thursday, Wednesday. Okay. Now on Wednesday, the BBC was sitting around 29.90. Let's take a look at Wednesday real quick. Wednesday being July 31st. July 31st. And the bounce that we were looking for, price reached down. These are, of course, last week's weekly trading zones. This week's zones have already gone out to the partners and passport holders, as they do every Monday morning at 6:15 a.m. Eastern since December 14th, 2009. So when the Fed announcement came out last week, price reached all the way down to the lowest weekly trading zone, 2960/61, and we bounced all the way up to 29.98. So that's about a 37-point bounce. At $50 a point, that makes for a nice bounce. Okay, back to the daily. So we caught that bounce, and we said the next logical place for price to pull back to after the BBC would be the 24% fib. So now let's put our fibs back on the chart. We're going to go from the swing low to the swing high. There we go. There's the 24% fib based upon the most recent swing low, the most recent swing high. And as we can see, we bounced to a 30.13. Now the fib was at 29.60. So to 30.13, we got about 53. That's about a 53-point bounce at $50 per point. That makes for a healthy bounce. Now we said if that 24% fib can't hold, the next stop would be the 38% Fibonacci retracement. Well, there it is. And let's just look at the bounce August 2nd. And that's going to be right here. We bounced up to 2960/61. We got below the lowest weekly trading zone for the week. Unusual, but it happens. Now, as price was beginning this descent, again, it reached all the way up to touch that lowest weekly zone, just to kind of say goodbye. Hasta la vista, baby. And then, we know what happened next. And really, that leads us into today. Now, we hit the 50% fib at 2880. 2880 right here. We've not seen any worthwhile bounce off of that 50. The 50% fib, especially on a daily chart, will almost always give you a most magnificent bounce. When price cruises through a 50% daily Fibonacci retracement, you really got to set up and take notice. I put this arrow in last week, this little ellipse or circle here, that represents the 62% Fibonacci retracement. Could we halt the decline here, reverse, and it ends up looking like we simply spiked the 50 and then catch that whale of a bounce that a 50% fib on a daily chart typically represents? Absolutely. Embrace all possibilities at this point. Now, the 62% fib, number one, it's a fib. Number two, the price where we got the last bullish cross as we're falling, that not only represents an opportunity for a magnificent bounce, it also acts a bit like a magnet. Remember, important prices and important areas are almost always tested. So that's where we sit from a daily perspective on the S&P. Here's a 30-minute chart going back to August 1st. We had a Logic 247 entry at 2978. That was the initial. Our indicators, and I'm going to show you this up close when I come back. There was a second entry, there was a third entry, and then we're going to take a look at everything that has happened since the Globex Open last night. Right now, let me give you a rundown of the numbers from around the world. Starting here in the US, cash markets. Here we go. Currently, the Dow is down 597 points. That's 2.25%. NASDAQ is down 234. That's almost 3%. S&P 500 is down 68, 2.25%. And the Russell 2000 down 43 points, almost 3%. In the commodity basket, crude oil down 13 cents, trading 55.53 last. We're going to talk about crude also when I come back. China's talking about buying Iranian crude. That's a big no-no. And, well, we'll see what effect it ultimately has on crude prices if that comes to pass. Gold, a bright spot, up $17.60. Go gold. That's a gain of 1.25%, trading 14.7510 last. In the Asian markets at the close, the Nikkei was down 366 points. That's 1.75%. The Shanghai down 46. That's over 1.5%. And the Hang Seng dropped 767 points. That's almost 3%. In the European markets, at the close, FTSE down 183 points, 2.5%. DAX down 213, almost 2%. The CAC down 117 points at the close, a little over 2%. Needless to say, we got a red day in Asia, a red day in the UK, and it's a big red Radio Monday here in the US of A. Let's go to Michael and get a recap of what happened in the live training room this morning. When I come back, we've got a lot of things to talk about. We'll talk to John. I'll walk you through all of the Concierge Trade Alerts from last night. We'll also look at the Logic 247 alerts, all that, and answers to your questions when I come back. Michael, take it away.
Excellent. Got it. There we go. Should be looking at my, yep, you are.
You got it. Locked and loaded. It's all yours.
Okay, I got it. All right, good afternoon, everybody. Today is Monday, the 5th day of August, 2019. Can you believe it's the 5th day of August already? Wow. We are more than halfway through the year. If you have not taken a free trial with us and you want to take a free trial with us, there's a couple ways you can do it. You can go to the homepage at CFRN.net. Right over here on the right-hand side, it says 5-day free trial, apply.cfrn.net. Or you can go directly to eminitrainingschool.com. And right in here, it says 1-week free trial, and all we ask for is your name, your email, and your phone number. And you can tell us your biggest trading challenge so we can tailor one-on-one training just for you, specifically for you. Hit the send button. Once you hit the send button, you'll be sent all the information you need to get into the live trading room. Okay, now we had a nice green day today. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 5th day of August, 2019. We made 30 ticks on crude, 11 ticks on gold. That put us up $410 this morning. Today, it took 15 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 9 trades. Wait till you see all the trades we missed, though. And crude just could not miss this morning, it seemed like. Okay, so on the month, we're only 3 days in, but we're up $762. That's averaging $254 per day. That's 2 hours, 1 contract. On the year, we're up 18,313. That's over 138 days, averaging 132 per day. Okay, 132 per day. Let's see. Yep. Okay, so let's just go show you what actually happened today. Excuse me. Okay. Wow. Go gold. There was so much volatility today. I'm surprised we only did what we did, but right here, first trade on gold, we picked up 5 ticks. Second trade was over here, and we picked up, I think we're going into the high of the day in here. That's why we didn't have a trade. No, there should have been a trade right here. What time was that? 10:22. And there should have been a trade right there to capture that long. We picked up another 6 ticks over here to put us at plus 11 on the morning session. Now wait till you see what we missed. We missed that one. We missed that one. Then the slingshot got all messed up in here. Then we started getting into the break. But during the break, there was a long opportunity right there and another one right there. And then it flipped around and gave a shorting opportunity right here. And it flipped around again and gave a long opportunity there and another one right there. That is a lot of movement. A lot of movement. Okay. The euro. Well, sadly, the euro didn't give us anything. Sadly and oddly. You know, during the break, right in here, you had a long opportunity there and another one right there. And that was it for the euro. Again, I'm thinking about ditching the euro for some other market. Crude oil was our big winner today. Wait till you see what we missed on crude. Yeah, we got 30 ticks on crude, but we picked up This one right here, we picked up 5 ticks. Then we missed this right here, big leg up, right up to the zone. Picked up 10 ticks here to get us at plus 15. Then we missed that right there, which would have been a break even. We missed this, which would have been another 10 ticks or so. We picked up this, which was another 10 ticks. And then right here we picked up, so where are we now? We picked up another 5 ticks right there to put us at plus 30. And right there we had a break even. Okay, we missed this beautiful long trade right here. And this long trade right here. And then it got really choppy. This was all during the break right here. It got really choppy. And then it made a big run up, put in a new high on the day, pulled back down, and yes, there was a long trade right here that would have been a break even. And now it's given a short right here where your stop would have gone to break even already. Okay. And that was our morning with crude. The ES, we had a couple of trades on the ES. Scrolling. Right here, we stopped out on our first trade on the ES. Now I missed something here. In here. I missed a short right there. And then I stopped out on this one, and then it went and did what it should have done, and the green line got up into the cycle. And we got a higher swing in place. And then way over here, we picked up 8 ticks on this one to get us back to break even on the day. Okay. Now during the break, there was a shorting opportunity right there. And then the slingshot got all messed up, and there wasn't anything you could do down there. Right over here, there was a long opportunity. I probably wouldn't have done this, though. I would have said it's not trending enough. And there was a shorting opportunity right here, and just put in a new low on the day. Okay, so if you look at it like this, Dwayne went over all the numbers, but the ES is now down 73 bucks. The Russell's down 44. The Dow is down 645. NASDAQ down 243. And crude oil's down 33 cents. That's just craziness in the markets. Craziness in the markets. Okay. So with that, we'll go back here to this. And if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today made 30 ticks in crude, 11 ticks in gold. Put us at plus $410 on the morning session. Took 15 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and took a total of 9 trades. On the month, we're up $762. That's over 3 days, averaging $254 per day. And on the year, we're up $18,313. That's over 138 days, averaging $132 per day. Okay. If you have not taken the free trial with us, you can do it a couple of different ways. You can go directly to our homepage at CFRN.net. Over here in the right-hand column, this is 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought here to this page. And you can just go directly to this page too if you want. EminiTrainingSchool.com. Scroll down to where it says 1 week free trial. Put in your name, put in your email, put in your phone number, and you can tell us the biggest challenge so we can tailor the one-on-one training for you. Thanks, Valerie. And hit the send button. Once you hit that send button, we'll send you all the information you need to get into our live training room. Okay? Okay. And with that, we can pass it back out to fabulous Phoenix, Arizona. Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready to take it back.
I am ready.
Okay. And let me check in here and see if John's here yet.
I haven't talked to him yet this morning.
Okay. Yeah, he is not here.
Alrighty. Okay. We're going to start at the top and work our way down. Let's go to the Logic 247 alerts. First, recap of the recap.
Today, it took 15 minutes and 2 trades to get to $100 per contract.
That's a good bingo.
Once again.
All right. Any questions in the chat box? All clear.
I don't have my chat box open yet. No, we're good.
All right, guys. I want to give you a chance to grab a screenshot here of the Concierge Trade Alerts. So if you're ready, let's do that. Now, keep in mind that most of the world, traders and civilians, if you ask them, what are the hours of the market? They're going to tell you, well, I think it's about 9:30. Traders, of course, will tell you, well, everybody knows. Wall Street opens 9:30. Wall Street. The Globex overnight market used to be, as some would call it, a shadow market. You know, whatever happened didn't have a lot of importance, a lot of relevance. That's changed. I first started trading futures back in 2005. That's when it was referred to by many as a shadow market, to use a term. But today, there's a whole nother story out there. A lot of the moves that we see in the market began during the Globex session. As we move into the London Open, the Asian session is a mixed bag. Some nights you'll have good movement, others not so much. The pace tends to pick up as we move into the London Open, 3 a.m. Eastern. Usually get a couple of good hours there, then a little quiet period. Then things start to wake up about 8 a.m., 8:30 Eastern in preparation for that Wall Street Open. For our traders, we'll get to that in a minute. We had a fantastic night last night. And again, to all of you who were on the trial last week and became passport holders over the weekend, your first day on the job, you did good. You did real good. And just keep it up. Okay? We're going to start with the S&P. Concierge Trade Alerts first, then we'll go to the Logic. Last night, Concierge Trade Alert said to consider being short the S&P 500 E-mini at 29.25. Now, let's just find the Globex Open on this chart. It's going to be right there. Globex Open.
I'm not sure.
Alexa, stop. Now she gets a little overzealous. All right, in fact, we're going to label that so that we remember what it is. Globex Open. Okay. Now, 29.25. Right about there. $29.25. Oh, baby. Some days it just falls right into place. Other days it doesn't. Why is that? I don't know. And some days I get aggravated and I just delete it. Start from scratch. Like that. Go this way. It was time to get the glasses checked. All right. 29.25. Hopefully won't be as painful on the rest of them. All right. CTA. 29.25. Okay. This first drop took us to, now we did not retest last night. This first drop took us to swing low 28.94. So from 25 to 94, that's a 31-point drop. But we weren't done. The market still had more to give us. We have dropped so far now to 28.54. So 29.25 minus 28.54. That's 71 S&P points. That's what the market made available. 71-point drop so far. If we drop our indicators on, right here, the market gave us an exit signal. Now that exit signal came in at 2,900 and a half. So let's just call it 2901. So a drop from 29.25 to 29.01. That's 24 S&P points. 24 times $50 per point. It's a $1,200 per contract move from here to here. If you've earned the right to trade 10 contracts, and I say that carefully because I know the temptation. It's so real, so tempting. If you have the money in the account, we all know 2 points is 2 points, 10 points is 10, and 24 is 24, whether you're trading one contract or 100. The difference is not only the financial pressure, but the emotional pressure. If you're wrong with one contract, no big deal. If you're wrong with 100, wow, that stings. Not only does it wound your finances, it wounds your psyche. Our methodology, guided by our 24/20 blueprint, does not have you going live with 10 contracts just because you have the money to do so. Now, there are methods out there that might invite you or tempt you to do something so foolhardy. I can't stress enough. Just say no. Just say no. With our method, as you learn, you'll trade in sim, the goal being to put together 10 consecutive days in a row where you reach the daily goal of $100 per contract gross. That's 2 points on one contract, $100. I want you to do that 10 consecutive days in a row in 10 trades or less. Once, and you know what? Let me just tell you up front, probably won't make it the first time out. That's just another truth about trading. When you've completed that part of the journey, you've put together those 10 consecutive days in a row, the 24/20 blueprint, designed to take you from 1 to 20 contracts over a period of 24 months, will green light you to go live with one contract. Just one. But I got all this money in my account. That's okay. It's a good place for it to be, in your account. In fact, get it out of your trading account, put it in an interest-bearing account where it's safe and FDIC insured. That's a freebie. Now, you're trading live with one contract. You got a pretty good handle on the methodology. You know how to read the chart now. You understand what the indicators are telling you. Use that knowledge to increase your account balance by $2,000 with one contract. When you've done that, the blueprint will give you the green light to add a second contract. Hey, you just doubled your income. We go from a merit-based system to a calendar-based system after that second contract. Remember, the purpose of the blueprint is to help you go from 1 to 20 contracts over a period of 24 months. What's the chance that you'll end up at 20 contracts in exactly 24 months? Slim to none, because life happens. You get sick, you got to go to the doctor or the dentist, and it turns out to be more than you thought, and then the phone rings and stuff happens. Life. If you're following the blueprint, obviously you won't get there any sooner than 24 months. And if it takes you longer, well, that's not a problem. It just takes as long as it takes. Not everybody has a goal of trading 20 contracts. The income derived from trading 5 contracts could be more than sufficient for lots and lots of people. Maybe your goal is 10. Maybe your goal is actually 100. So that 20 is just the first notch in your gun belt. However that plays out, once you do get to 20 contracts, 2 points a day represents $2,000 a day. If you're trading 10 contracts, 2 points is $1,000 a day. 20 contracts, 2. See how that works? Now that's all a function of math. That has absolutely nothing to do with our indicators, our methodology, our strategy. That's all a function of math. You can apply those numbers to any method that enables you to consistently take a couple points a day out of the S&P 500 E-mini. It's no closely guarded secret. Everybody knows it. Lots of people talk about it, but few people ever actually show you how to do it. We try to show it to you every single day. Now, the fact that this dropped 71 points, the fact that it dropped 24 points before we got an exit signal, what does it take to stay with a trade this length of time? Well, on the S&P, I'll use as an example because it's the chart I have up. When you are in an extended move, now, for the S&P, the average swing, 3 to 5 points. Well, once you've got 5, 6 points under your belt, you are in an extended move. It may not drop 71 points. It might not even drop 24. But once you pass 5, because the average swing is 3 to 5, once you pass 5, you're in an extended move. Okay, so now what do? Absolutely nothing. Just keep your hand off the mouse. In an extended move, when that move begins to run out of steam, price will walk sideways, just like you see it right here. Up here, when this move started to run out of steam, what happened? Instead of falling, price started to walk sideways. That repeats itself again and again and again. Okay, so price is walking sideways. Now what? This little line right here, the black line, looks like a set of stairs. That's why we call it the step line. What we're looking for is the step line to cross that red and falling CFMA1, and the first green candle that prints above the step line after it crosses over, that is your exit signal to the tick. Entering here per the Concierge Trade Alert at 29.25, exiting at the exit signal 29.01. It's actually 2900 and a half, but we'll call it 29.01, be conservative. You're out. Now, 24 S&P points at $50 per point It's $1,200 per contract traded. And for the one who's earned the right to trade 10, it's a $12,000 move, and the move's not over yet. We did not pull all the way back to the BBC because we had a lot of downward momentum at our back. We tried to pull back here. We tried to pull back here. Now, for those of you who are partners and passport holders, those who've been on the trial or are currently on the trial, in the live training room, on the range chart where we do our training, you see Michael do this all the time. When price can't make it all the way back to the BBC because of the excessive bullish or bearish momentum, depends upon which trend we're working with, you're looking for a down close or a close below the trend line. That would be this candle right here. That's your close below the trend line. And the next candle opens at 28.94. 28.94 to 28.54. Well, that's 40 points. It's $2,000 per contract traded. You can do the other math. Do we have a fresh exit signal? We had an exit signal here on the re-entry here. We do not, as of yet, have an exit signal. What's it going to look like? I can tell you. Price is going to walk sideways. The step line is going to decisively cross the falling CFMA1. And when a green candle prints and closes above the step line down here, that will be the next exit signal. And tomorrow I will show it to you. I will show you how price walks sideways, the green candle above the step line, all of that. It repeats itself over and over, day after day. Now, to the casual observer, one might say, well, that's pretty cool. Too bad it doesn't happen all the time. But it does. It does happen all the time. It's not always a 71-point drop or a 24-point drop or a 40-point drop. But whatever it drops, logic is there. If you apply just a little bit of logic to your trading, you can see a world of difference in your results. Now, we don't ask you to just believe us because we're nice folk. No. We invite you to test it for yourself. The methodology, the indicators, all of it. Kick the tires, take it around the block, drive it across country, whatever you want to do over the course of 5 days. You have access to a demo platform. If you're running Ninja and a host of other platforms, our indicators will fit right in like a hand in a glove. We use the DT Pro platform. I like it because it's simple, just like our methodology, which is simple by design. Not a lot of bells and whistles on the DT Pro platform, but I don't need any bells and whistles. So for newer traders, it's actually a good thing because all those bells and whistles can be confusing, tempting. It's just another shiny object that causes you to take your eye off the ball. Now, we're still dropping. Where should we find some support on this move? Well, partners and passport holders already hold the answer to that. And I'm going to go ahead and share it with you, just this one, because it's a Monday. And sometimes on Mondays, we just need something to lift our spirits. 2811/12. What? That's what the man said. 2811/2812. Now, of course, we'll share all the zones with the entire community on Thursday, as we do. And as always, I encourage you to jot those down, hang on to them, because I give them to you on Thursday. They can help you Thursday, they can help you Friday, they can help you on the Sunday night Globex Open, and into the new week as the new zones take control. All right, so let's get this down to 2812. Let's do it that way. Am I saying that we're going to drop another 30 some odd points? Well, yeah, I'm just not saying it's going to happen right here, right now. But keep your eye on the ball. Now let's go back to that daily chart for a minute. We're at the 62. We're right there. This is a pretty serious day. And there are fundamental reasons behind this move. Now, knowing exactly which fundamental reason was the straw that broke the camel's back, you know, a lot of it's getting hung on China, and the trade deal, Chinese firms not going to buy soybeans from us anymore. But wait, this is the S&P. Yeah, well, everything's connected, okay? So we do look for a bounce in this area, but the next stop on the way down, if we take out this 62, and based on this, there is a high probability. Now, re-entering here at, oh, it was the open of that candle. That candle opened at 28.94. So from 94 just down to 50, that's 44 points. Just remember, if you're playing along at home, wait for the market to go sideways. Wait for that step line to cross. Get your green candle and take your exit. Okay? Beautiful, beautiful opportunity. Going back to this entry here on August 1st at 29.78. You can see here we did have a pullback all the way to the BBC. Got a nice leg. We dropped from 29.50. Put in a swing low down around 29.33. Back to the BBC. Price always reverts to the mean. And in this case, the mean is the BBC. We dropped from 29.45 down to 29.15. Back to the BBC. Consolidation. And now the drop that we're talking about right here, right now. All right. So that's everything on the S&P. Let's go to the Dow. We're going to pick up the pace, move a little quicker here. On the Dow, we said to consider being short at or below 26,370. $26,370, 270, 170, 070. That's 300 points. Let's get a final tally down here. Swing low so far. We're going to go 26,370. Minus 25,700. 670 Dow points at $5 per point. $3,350 per contract traded. Per contract traded. So yes, the 10 contract trader who's earned the right, this is a $30,000 move. Not a bad way to start the week. Again, the worst thing you can do is just jump into the market, start trading in size before you actually become consistently profitable, please, I know how tempting it is, resist. Resist. Just say no. All right, these are, of course, last week's weekly trading zones. Now, let's do this, and this, and this. We had an exit signal at 26,183. 26,183. Let me grab a pen. We'll round it and call it 26,185. So 26,370 minus 185. 370 minus 185. Try that again. 370 minus 185. 185. That's why it threw me off. So from here, the published entry on the Concierge Trade Alert to the exit signal right there, 185 Dow points at $5 per point, $925 per contract traded. As price walked sideways, tried to reach up, couldn't do it. We put in a new low, and then just like I drew that trend line on the S&P, just as you see Michael do over and over and over and over and over every day in the live training room, see, this is what he's training you to do, to learn how to trade, to be able to spot opportunity as it develops. It doesn't matter what market you're in. It doesn't matter what time frame you're trading. There is no magic time frame. The only magic in any time frame is the magic you bring to it. And no matter what time frame or market you're trading, the clock on the wall is always price. And remember, everything we do is fluid across all markets and all time frames. So there's your down close below the trend line, because the downward momentum was such that price, it tried, but it couldn't quite pull all the way back to the BBC that time. So that gives you an entry on the open of this candle at 26,124. $26,124 down to, we'll just call it 25,700. $424 Dow points times $5 per point. It's $2,000, $2,120 per contract traded. Now here's the thing. We don't have an exit signal yet. This move, the second part of this, which began here, $2,000 per contract so far, could this be the beginning of an exit signal? Possibly. Will price walk sideways like it did up here? Will that step line eventually make a decisive cross across the red and falling CFMA 1? Yes. Will we eventually get a green close above the step line? Yes. Now, what do you have to do to make that happen? Nothing. There's nothing you can do. What you can do is nothing, which means you just patiently wait for that to happen. And then when the chart, not some guy on the TV, not some guy on the radio, and certainly not some joker on the internet, when the chart that you're trading tells you it's time to exit, well, it's time to exit. All right, jump to the Russell. You can see leg, retrace, leg, retrace, leg, retrace, leg. Last night's Concierge Trade Alert, consider being short 1530. That's going to be right about here. 1530. All right. From 1530, we dropped to 1513. We got it. Here, let me open this up so I can actually see it, and so can you. From 1530, we got an exit signal at 1516. So we'll call it 15 Russell points. $50 per point, $750 per contract traded. Just like we saw on the S&P, just like we saw on the Dow. From this swing low, I'm going to draw a trend line. Just like that. We would like to see price pull all the way back to the BBC. That's the highest probability trade we have. When it can't quite make it, the same methodology that you see day after day, trade after trade, in the live trading room applies here. So the entry is on the open of this candle, 1510.90. So from 1510, we've dropped to 1540. That's 70 Russell points at $50 a point. Yeah. If you're the 10 contract trader, it's a $35,000 move. Why do I keep bringing this up? It's important for you to understand, because you're going to come across websites and emails and all this other stuff that encourages you to trade above your pay grade, and you're not ready for it. Yes, it's there. Yes, it's real. And yes, you can get there if you earn your way there step by step. That 2420 blueprint, there's no point in the journey that it ever adds more than one contract at a time. And you're always adding the next contract with profit you earned in the market. That's why that first contract, we want to see you increase the account balance by $2,000, so that the second contract is underwritten, not with your savings, not from the cookie jar or the mattress, but with profit you earned in the market. If you don't understand how powerful that piece of the puzzle is, contact me, get a hold of me, book a mentoring session. Let me explain it to you. Okay? So many people get so far in, over their head, blowing up accounts, chasing moonbeams, and then they wonder, what happened? Okay, well, what'll happen is nothing good if you're too aggressive with your size in the beginning. You must trade with a hard stop, number one. And number two, consider, if you will, building your account, building your trading business, one contract at a time, with each additional contract always being underwritten with profit you earned in the market. Now, you might not get to wherever it is you're going as fast as you want to get there, but by following that method, there's certainly a high probability that you will actually get there. And it takes as long as it takes. Don't rush it. Don't push it. Good things are on the horizon. Self-discipline, so important. Most of us worked a job, had a boss, always had somebody telling us what to do, when to show up, when to go to lunch, when we could even use the bathroom, and when it's time to go home. But when you take on the mantle of trader and open your account, you're the boss. Ain't nobody telling you what to do. Nobody looking over your shoulder. Well, maybe a spouse, but yeah, you get my point. So perhaps for many, the first time in your life, you're now the captain of the ship. You can do whatever you want. You can point that mouse anywhere and just click it. Click it, click it, click it. You can. That's freedom. It's awesome. But what you need more than you need the freedom is this self-discipline to resist the temptation. And there are many. When you're new, everything looks like an opportunity. When you're a hammer, everything looks like a nail, right? Not everything's a nail. Let's jump to the NQ. Last night, Concierge Trade Alert said to consider being short 76.70. Okay, there's 76.70. Let's find our exit signal. Right there. See how price walked sideways? No photoshopping required. Exit signal printed at 75.85. What is that? An 85-point move from 76.70 to 75.70, which is right there. That'd be a 100-point move. So from 70 to 85, that's going to be 70. That's an 85-point move. All right. So 85 times $20 per point. 85 times $20 per point. That's $1,700 per contract. There's your exit signal right there. Now, I know that some people, and it's okay, this isn't a right or wrong thing. Some people say, well, I just trade the S&P. Okay, I mean, nothing wrong with that. Some people say, well, I just trade the Russell, or I just trade the NQ. Okay, you can do that. In fact, if you're new, if you're just learning, it's probably a good idea to stay focused on one or two markets. But the day will come when you recognize that if this is happening on the S&P, it's probably happening on the Dow, which means it's probably happening on the Russell. Could it also be happening on the NQ? Well, here it is for all the world to see. We tried to pull back, couldn't quite get there. Down close below the trend line. Open of the next candle, 75.71. All right, sounds like we got John on tap. Let me bring him on and we'll finish this up. Let me open up your mic, John. Hang on. John, welcome to the show.
Yeah, hi. Thanks for having me on. Sorry I'm a bit late today, but it's kind of
That's all right. We had plenty to talk about.
Yeah. You know, if you remember what I said on July the 25th, this could be a carbon copy of July the 25th, 2011, and we went through it, and it looked very similar, if you remember, with that second double kind of flat top. I can remember it from my mind, you know, but it was kind of a flat top, and then it just tanked from there. And really, the intensity of the selling, and by the way, just to remind everybody, we did say quite strongly that we thought it was, you know, if you didn't want to go short, at least get out of the market, stand aside
right.
ahead of these rate cuts, and that turned out to be a pretty prudent, prescient advice. This is very dangerous because we're in basically an 87 light setup. In fact, it's even worse than that because we had a Wednesday, Thursday, Friday intensifying downward activity on increasing volume, and unless the Fed steps in here, sometimes they come in when we're down about 700 and rally, so you can't rule out a rally this afternoon to try and prevent what would effectively be almost a carbon copy repeat of the 1987 scenario. I.e., we're not even at 2 o'clock yet, and by 2 o'clock the market started selling off very intensely. Some people asked me how much downside I was expecting a lot yesterday, and I told them, wouldn't rule out 2,000 to 3,000 points very quickly, and we might even make an all-time record today if we can't rally, and it doesn't look like we're going to be able to rally at the moment.
Yeah, we're bouncing off that 62% fib and that number I highlighted last week here with the yellow arrow. But the bounce is minimal so far. We'll see if it can gain some traction.
Well, it'd be great if it could, but it's sort of beyond the point of return right now. That kind of doji attempt on Friday where we did rally off the lows looked like it might be nipped in the bud. But this, by the way, I looked. In fact, it's if you wouldn't mind, Dwayne, if you could put up the EEM, this will really knock your socks off when you look at this chart. Because and put it up on a monthly basis.
All right. EEM, and that's monthly.
Yeah, this is the emerging markets. Can you squeeze it up a bit to get more data? Yeah, it's a lot like the China chart, but look at the meteoric rise that we had from 2003 onwards. When we had the plunge in, obviously, the 2002 bottom. Remember, we bottomed in July of 2002.
John, I got to step off 1 second. Just please keep going. I'll be right back.
Yeah, we bottomed around July the 24th of 2002. IBM sort of led the way higher, and we rallied into the August-September, crashed down into the October low. I think it was October the 10th or 11th of 2002. When the techs really made their lows, and then we had a big rally, and then we had a final sell-off into February and March of 03, which is what you're looking at there at the bottom of that chart, and began a meteoric uptrend. Good question is why did that chart go up so much in from 2003? This represents the emerging markets around the world. You had a massive move up in Russia, remember, from the 98 bottom. You had a massive move up in oil prices, which for the whole decade virtually. You had a massive move up in Brazil, Mexico, China, of course, was the leader by far. And the Chinese market went all the way up to all-time record highs when it kind of peaked right ahead of the Beijing Olympics, when they were growing at about 14%. Because remember, at that time, I think they spent about 50 billion or something, or some huge number on the Olympics. That really caused the Chinese economy to overheat effectively. And, once the Olympics were over, there was nothing left, to build at that time. And the markets plunged summarily, along with the 2007 to 2009 drawdown in the US. So the problem is, that when you look at this market and you look at the US that has, literally been making new all-time record highs since 2011, when we, in 2009 March, we predicted that the that the transports and the mid caps would be the first to make all-time record highs, which they did in 2011, and they made it around in July of 2011. Got to July the 24th, 5th, and this problem was that Europe was becoming a really big problem. And that's what caused the markets to tank. Some indices went down about 20%, not everybody, but it was a it was a collapse that literally took the market down very, very, very substantially. And that caused the Fed to come in and do QE3. And from October the 4th of 2011, we began a meteoric recovery into 15 up to 15. Then we ran into a roadblock. 15, 16 had a big correction, and then when Trump got elected, that was the next up leg that took us up to recent highs of over 27,000. So we basically went from about 16,000, excuse me, to 27,000. So when you look at the U.S. Versus, and you look at the world markets, the world markets have been struggling tremendously because of lower oil prices and a stronger dollar. The stronger dollar has really hurt. The weaker dollar remember the dollar was weakening all the way from 2001 through 2009, and the emerging markets were rose dramatically because of that. That's what we need to have happen right now, and I believe while it's a little bit overdue, I think, look, it kind of looks to me like we're in for a repeat of July of 2011, where we probably drop down into, gonna have some tough time here in the next couple of months. Because after a day like today, I just don't think we're going to reverse back up miraculously. The Fed may have to lower rates more, and as we said, look, this stimulus thing is only just starting, and the key thing is, the Fed is going to panic here in the next few months, because if we do have a repeat of 2011, what are they going to pull out when we get down to October lows? They're probably going to pull out Q4 or Q5 or QE to infinity, as Jim
Kramer,
the gold guy, the gold guru, keeps saying.
Jim, exactly that.
Yeah. And I'm very bullish on the last 3 months of the year. I think you're going to see. By the way, look at this gap. I mean, this is terrible.
Yep. This is the SPX cash market.
Yeah, I mean, we've got a double breakaway gap to the downside here, and that is really dangerous. Now, if you remember, the previous bottom in June was a beautiful three-wave pullback over a monthly period, and we did have this renewed upside. If you could just go back to that other chart for a second, Dwayne, if you wouldn't mind. Right. So, look, stranger things can happen. You could argue maybe we're still in the kind of 1999 type syndrome, where you get these heart attack corrections, and if we were to turn, if the Fed does something incredible here, maybe comes in and somehow gets this market back up, or maybe weakens the dollar or something, that if the market were to recover from here, I did say, I put out a few tweets over the last 24 hours, and I said, the correction could be short and sharp, or it could be prolonged. Could stretch over a month or two, and things could get pretty ugly, by October, and that might inspire the Fed to do something pretty groundbreaking, and potentially create a really strong rally going into the end of the year, possibly take us up to new highs, maybe up to that 3,300 target that we've had for a while on the S&P. And that would be ideal. I mean, that would be almost like, the master strategy, because if we hit a peak in the first quarter of 2020, a new all-time record peak, then the economy should be doing the same about 9 months later, 9 months to a year later. So that would be ideal to have the economy doing everything, going into 2020 election. And it could happen. So, and especially if the dollar gets weaker, because, if the dollar gets weaker, the whole world's gonna explode higher. I mean, because the emerging markets are so strangled. They're just strangled by the strong dollar, and getting the relief of a weaker dollar. I mean, a weaker dollar is absolutely going to cause all markets to soar, equity markets, gold markets, asset prices, et cetera, et cetera. So, and it should give a very good feeling of well-being, and we may even have higher wages and things develop over that time. But a bit of inflation coming into the system, thanks to a weaker dollar, would be very, very positive. And on the other side, look, the Chinese, you can blame this whole thing on China, really, because And look, they think they can win. They're sorely mistaken, because Trump holds all the cards. The U.S. doesn't need to import stuff from China. They're starting to make it here, and they're going to do that more and more if China doesn't sign a trade deal. So they might have to go through a couple of months of pain, and at some point they're going to get the memo, and they're probably going to sign a real deal, not one that's going to be a cheating deal. So and if they sign a real deal, then the markets could really soar into the new year. And but on the other hand, we've been talking about this for a long time. The yuan just broke to a new low today. It is down about somewhere between 12 and 15% of its recent highs. And you have to. It's just like people get psyched, by believing the U.S. dollar could never, collapse or have turn into a disaster, like a hyperinflation or anything like that. You can never say never in this world. That could really happen, and it kind of looks like it's going to happen going into 22, 23, 24, because the debt situation by then is going to be unbelievable, and it's going to be 700. It's going to cost 700 billion to just before we earn any dollars. 700 billion is going to get taken out of the budget. And what happens if interest rate rises? Rise to 3, 4, 5% by then? No, not 20%, just 3, 4, 5%. All of a sudden the cost of maintaining the debt, which will be massive by then, could be just unsustainable. You might take $1 trillion or $2 trillion out of the budget, and all of a sudden you got no operating revenues. You got no net revenues to run the government. That's the kind of thing that could really happen, because we're living on borrowed time with all this debt, and one of these days it's going to come back, bite us in a very, very big way. So the gold is, you can't. I mean, you look at the gold chart. If you could stick that up for a second, during. You look at this gold chart. I said it's kind of an upward running correction. It's almost inevitable now. We're going to spike. If we do have a crash this afternoon, we're probably going to spike through 1,500 tomorrow. We might get to 1,550, 1,600 even. It could be very dramatic, because there's going to be people getting scared and going out and buying gold. On the other hand, the yuan is only day one of the yuan. So the yuan now, like I say, the Chinese have watched in awe as their currency soared, over 3 decades, and they think it's invincible and nothing can go wrong. Nothing could be further from the truth, especially in regards to China, because it's kind of going through that Japan syndrome where it just grew too fast for too long. And the other thing is the Chinese miracle, which it is, nobody can take that away from them. What they've done is nothing short of phenomenal. But nothing grows to the sky. The chart we were looking at, which represents the Chinese market, hasn't gone anywhere since 2007. So the cracks are appearing in the dam of the Chinese economy. The ghost cities, how many more can they build? They've built all the rail lines all over the country. I mean, the infrastructure is unbelievable. So they really are facing a potential big slowdown, and now they're losing companies to Vietnam and maybe even North Korea and places like that. So the Chinese are really in trouble, and a lot of companies may come back to the U.S. because Trump has created a fiscal paradise. And if the dollar goes down as well, it just makes it more competitive against the rest of the world. But the Chinese are the yuan. That's what I want to get to. The yuan breaking down here. Never in history have we had a situation where you got 1.5 billion people who are watching their currency go down before their eyes. And what are they going to do? They're absolutely besotted by gold. They're going to go out and buy more gold, and they're going to. And when that multiplier kicks in, and then you have billionaires buying gold because they're fearing that they're going to lose their wealth. The 500 or so new billionaires in China. I mean, this is a massive thing that could just grow out of nowhere. and become a massive worldwide theme. On top of that, you got these cryptos, maybe gold-backed cryptos and ETFs and everything else. So, and people are going to, you know, if we suddenly run up to 1900 and people see gold stocks soaring to, you know, unforeseen heights, there's going to be a mania developing in the gold sector. And because, you know, we you know, then this is a theme that's probably going to unfold over the next 4 years. And on top of that, you got the Iranian situation, and you got other things still simmering. Problems could develop around the world. So there's a lot of all of a sudden, you know, I mean, we've been in a financial boom for 10 years, and all of a sudden, gold is rising. Look at that breakout from the 1430. Look at the way this thing is sort of going higher here. We could really be looking at a vertical up move. Takes us through 1500, maybe with a gap. Maybe we come back and test the 15, but not by much, and all of a sudden we're in a new range, 1550, 1600, something like that. It's definitely going to get people's attention. And you know, gold has been undervalued for a long time relative to these crazy house prices and everything else in the world.
That's right.
You know, since 2000, you know, price of everything has gone up by multiples, and gold has been left behind, and definitely silver has been left behind in a huge way. So that's the way I kind of see the world today. And you know, this is a very troubling development. Now this downturn is a real shocker. It's the fact that it's happened early, you know, because we were ahead of the timeline on the 87 map, if you like, and the fact that you know, we did have a break that we peaked on August the 24th, 1987. We've peaked, you know, a month early. Actually, we peaked. You know, we were a month ahead of schedule. We peaked a month early. That's a really, really bad formula, because the 87, there was a sort of a crack initially that where it went down, shocked everybody. Feels the same, very similar right now. And then we had a rally, and everybody thought, oh, you know, breathe a sigh of relief, when everything was back on track. And then remember the 1st of October, that was the high, and it went down every day for the rest of the months virtually. So, and including, and of course, with the crash. But that's kind of the you know, the scenario that could happen. So, and look, there's a lot of stuff that could really spook the market. You know, when the market gets in, you know, the market has ignored a lot of bad news. But when you know, they got people trying to impeach Trump and all this stuff going on, you know, who knows what else will happen in the next few months. It could really derail the market. So, and it would probably be very bullish for gold, because of this socialism thing is just out of control. I mean, it's hard to believe it's happening, where these people think they're gonna, you know, get away with giving away everything for free. I mean, it'll be the end of the U.S. because, as I said the other day, you know, the world, you know, the next phase in the emerging markets, they're going to eat our lunch. You know, I mean, the U.S. has had an edge now for the last 10 years and has outperformed the rest of the world. I mean, I think the U.S. can still outperform the rest of the world because they got so much infrastructure to improve, to repair. I mean, they got to rebuild Baltimore and all these other cities in the U.S. So there's plenty of work to be done. And I think the U.S. will continue to you know, maybe even outperform the rest of the world. But the good news is the rest of the world there's another wave coming for the rest of the world, and it's probably going to be epic when it comes. So maybe the good news is, in Trump, you know, we eventually get a trade deal. In fact, we get trade deals with every country. And then we could be riding a new prosperity wave of unforeseen proportions, including the fact that Britain gets out of the EU, and you know, they do well on their own, and the EU does well. And you know, remember, you've got all the ingredients with the stimulus going on in the world right now to create the next prosperity wave. So we're having a correction here after a 10-year uptrend. That's probably overdue, but the next wave will be, possibly be another 10-year wave in the roaring 20s with a couple of interruptions in between. We're definitely going to have a more volatile market now, and we may have a big pullback, a really big pullback in 22, 23, 24. But after that, I think we're, the world is going to be on an incline of unforeseen proportions.
I think you're right, John.
Yeah.
I think you're right.
So,
we opened the show talking about these senseless tragedies over the weekend. Boy, I wish I had the answer to this problem. An armed society is supposed to be a polite society, yet here we are. And
well, there's obviously a lot of the the Democrats have been shouting it's all Trump's fault here in the last few days, but it's really their fault because they're being so irresponsible about the border and controlling the border and just, creating sort of open borders and all this sort of thing, decriminalizing coming into the country. It's really making a lot of people very mad. And, the extremists are the guys who are saying, I'm not going to take it anymore. That's the problem. I mean, it really is. That's the real problem. The U.S., I mean, it's kind of hard to believe that the United States is in this predicament today, where they're overrun with an immigration problem, where you got all kinds of people from all over the world who are coming. I mean, you could argue, I don't want to use the wrong word, but they're basically overrunning the country. I mean, you got 1 million people coming in a year out of control.
It is out of control.
Yeah. So listen,
and it's only going to get worse unless something is done.
Yeah. Have a great afternoon.
All right, John.
Thanks.
Take care.
Okay.
Catch you tomorrow. All right, back to the NQ. All right, we covered that one. Let's take a look at crude. Go to the concierge. On crude, let's find the Globex open. Right there. That's when we go to work every Sunday night, 6 p.m. Eastern. Logic 247. Monitoring and analyzing the markets from Sunday evening, 6 p.m. Eastern, till Friday afternoon, 5 p.m. Eastern. The markets really don't sleep. Now, the other day, someone posed a question, and I wish I could capture the essence of how it was posed. Someone who is obviously not familiar with our methodology, someone who is obviously not familiar with global markets, that there even is an overnight session or a Globex. The question was, an alert at 1 a.m. in the morning? Really, Dwayne? Yeah, really. Some of the best opportunities out there take place at 1 a.m. in the morning, or 2 a.m., or 3 a.m. Now, the argument used to be, there's just, again, what was the term? Shadow market, right? Yeah, there's not enough volume to support it. Really? I beg to differ. Let's take a look. On crude last night, we said to consider being short at or below 54.90. Okay. Let's draw a line in the sand there. Okay, the initial drop took us down to 54.68. We'll call it 54.70. It's a $200 per contract move. And then from 54.90, we dropped to 54.22. We'll call it 30. It's a 60-point drop, $600 per contract traded. Now let's go back over here. The candle that triggered the initial move, okay, remember, important prices, important areas are almost always tested. Okay, $200 drop and the big drop, and then we get back above the trigger again. And here we come for a 1, 2, 3, a fourth time. Okay. Let's open up our volume. When we triggered at 2 a.m. Eastern, really, Dwayne? An alert at 2 a.m.? Yeah, really. Let's track that down right there. During that 30-minute period from 2 a.m. to 2:30 a.m., there was 6,421 contracts traded just in crude. Now, even if you've earned the right to trade 10 contracts, it's scarcely a ripple in the pond when you've got 6,421 contracts trading in that 30-minute period. So if volume has held you back from some of the best trading available, overnight, Globex, let's take a look at some more markets. Let's see if there's any validity to that argument. Okay, there are markets that are thin on the overnight, best perhaps traded closer to Wall Street or during Wall Street. But let's just take a look. Now, the second trigger came at 8:30 a.m. Eastern this morning. That's before Wall Street wakes up. 13,068 contracts. All of this happening during the day session, so certainly there's no concerns about volume there. On crude, we also said consider being long at or above 55.60. Were we off by a point? Looks that way. Our line in the sand was 55.60. We actually put in a swing high at 55.61. One tick over the line. All right. Let's back up here for a minute. Let's go to the S&P again. And we're going to open up our volume there. The initial trigger last night was 9 p.m. Eastern. Probably what is typically one of the flattest times in the market during the Asian session. And for volume, that's a little bitty green candle, but look at what it represents. See that little green candle down there, the little volume candle? During that 30-minute period, from 9 p.m. to 9:30 p.m. Eastern, 31,000 contracts traded. Now, was last night something special? I mean, was there substantially more volume last night at 9 o'clock than typical? That's a great question. So 31,000 last night at 2100 hours. The previous 2100, 13,228. Let's go find another one. 2100, 8,942. That's in 30 minutes. 2100. There we go. 5,042 in 30 minutes. At the typically quietest time of the market. go to the Dow. And we know the Dow trades a lot less volume than the S&P. Let's insert some volume onto this chart. There we go. Last night, 9 o'clock, initial trigger on the Dow. Volume, 5,344 contracts. On that second trigger, not of the alert, but the re-entry on this move that I explained earlier, that happened at 6:30 a.m. Eastern, 3 hours before Wall Street wakes up. 2,738 contracts traded inside of a 30-minute window. Here's one where you're going to see less volume. Let's put some volume on the chart. Okay. The initial trigger off the Concierge Trade Alert, 2,100 hours, 1,600 contracts. Last night, or this morning, on the re-entry, 6:30 a.m. Eastern. Now you notice how the times are lining up from the S&P to the Dow to the Russell. Is that unusual? Not at all. Just some law that says they have to move in lockstep that way? Not at all. (6:30 a.m. Eastern), the Russell, during that 30-minute window, 1,183 contracts exchanged hands. In Q, initial trigger, there it is again, 2,100. These are 30-minute candles. 10,486 contracts traded. And that little bitty candle right there, the re-entry, again 6:30 a.m. Eastern. What do we got? 3,686 contracts traded inside of a 30-minute window. So if you've earned the right to trade 10 contracts or 20 or even 100, there was certainly no problem with that. Last evening, it was a big evening, perhaps a little more volume than normal, but you need to own this information yourself. Don't just take my word for it. Break your charts out, put a volume indicator on there, go take a look. Globex is no longer a shadow market. There are days when the overnight session, Globex, actually becomes the engine that drives Wall Street. Yes, the tail is starting to wag the dog. All right, we covered crude. Let's look at gold. Concierge Trade Alert, consider being long 1457. Swing high so far. 1481, 82. $2,400 per contract available. And if you trade more than one, of course you can do your math. Now, bullish cross, price pulled away, price pulled back to physically touch, up close. You could be long this market right now. Today's radio freebie, consider 1479 to 1481 to 1484 to 1489 to 1500. If we see 1500 from here, that would be almost a 20-point move. Gold pays $100 per point, so that would be a $2,000 per contract move. Okay? All right. Let's run through logic real quick. What I just showed you, the Concierge Trade Alerts, that's a static report issued every evening, shortly after the Globex Open. I try to get it out every evening, no later than 9 p.m. Eastern. Most of the time, I manage to do that. As we did with Crude, this is how I teach our traders to handle the Concierge Trade Alerts. When the numbers come out, go to your chart and put your lines in the sand. At this point and below, we're only thinking short. At this point and above, we're only thinking long. Everything in between is the market trying to find its direction for the session. There will be times when we have two-sided action. Opportunity to be long, opportunity to be short, and then maybe even an opportunity to be long again. Okay? If you're just an S&P trader or just an NQ trader or just a Russell trader, there's nothing wrong with that. Like I said earlier, if you're just getting started, it's a good way to go. Focus in on 1-2 markets. With us, what you're learning is not how to trade a specific market. You're actually learning how to trade. Once you learn our methodology, once you learn to see the market through the lens we see it through, and you begin to think the way that we think, that trade that you executed so beautifully on your S&P or your NQ or your Russell, and don't push yourself, there's no race, you're going to learn over time. You can take that exact same process and apply it. If you're trading the S&P, you can take the same process, apply it to the Dow, apply it to the NQ, apply it to the Russell. Now, the market is not always conducive to trading. There are times when the market sends a clear signal, stay out, be flat. When the opportunity develops in the S&P or the Dow or the Russell or the NQ, any of the indices, you should always look. Now, if you're focusing on 1 or 2 markets now, good. Just keep doing that. But make sure you observe what's happening in the other indices. And then you're going to start to see exactly what I'm talking about. Okay, I put on this particular trade, whatever it might be, in the S&P, as an example. I did well. I'm pleased, right? Whatever your story is. You're going to start to see, well, okay, I could have additionally put on a trade in the Dow. I could have also put on a trade in the Russell. I could have even put on a trade in the NQ. Under normal conditions, they will do basically the same thing. Okay? They're not always moving in lockstep. There's no one index that always leads the others. We all look for that in the beginning. Oh, let me just figure out which one moves first, and then blah, blah. Here comes a trading strategy. It's a great idea. Unfortunately, it just doesn't pan out. Because some days the S&P leads, some days the Dow will take off first, other days the Russell, NQ. You'll hear me saying things like NQ leading to the upside, NQ leading to the downside, whatever the case might be. It changes from day to day, hour to hour even. So don't waste time and treasure chasing that. Just know that when you have a tradable move in the S&P, you probably got one in the Dow, one in the Russell, one in the NQ. Not always, but quite often. More often than not. Now, what if I trade all 4, spread my risk, or do I just trade more of what I'm already trading? Well, that's a decision that you'll have to make. Becoming a trader, whether you use a mechanical methodology, which is what we teach you initially. We teach you a rules-based mechanical method. All the thinking has already been done. You simply have to show up and do what you're supposed to do when you're supposed to do it. And it never has to become any more complicated than that. You can keep that thing locked on simple all your trading days. If you choose to move out of the strictly rules-based environment and become a discretionary trader, then you might find yourself confronted with the question, all right, am I going to trade 10 contracts on the S&P, 10 contracts on the Dow, 10 on the Russell, and 10 on the NQ, or am I going to just trade 40 on the S&P? That's a decision that you'll make, even if you're using the mechanical rules-based method. As a trader, there will be times that you have to make a decision. Okay? The good news is if you're with us, there are people you can talk to, people who've been around the business a while, from our broker to other traders that are part of the CFRN family. Having someone to talk to, someone to turn to, on a good day and a bad. I mean, when you have a really good day in the market, who are you going to tell? Well, you can tell most anybody, but it doesn't really register. They kind of get that glassy look. Wow, I'm real happy for you. They have no idea how hard you worked. All the blood, sweat, and tears that went into you being able to make that statement. I had a great day today in the S&P. You know, I took X number of points out, whatever the case is. So, again, having people to talk to, that's why our discussion group, to me, is so valuable. Oh, what I would have given. Well, number one, to have a teacher back in 2005. But number two, to actually have other traders who were in the learning process, right along with me, learning together. That's what our discussion group represents. And as a passport holder, you have access to the discussion group. Some of the nicest people I've run across in the world of trading. God's been good to us. He's graced us with great people. You'll find someone to listen, someone to talk to, someone to offer their ideas, someone to tell you their story. Whatever you need. And that's what we offer. Everything a trader needs. One low price. You can shop the internet. You can pick up a little of this here and a little of this over here and a piece of that and a part of that, and you can piece it together. Or you can save yourself some time and treasure, find everything in one place at one low price. Again, that's a decision that you have to make. We've covered all the major markets. Last week was our 1-year anniversary of Logic 247. CFRN has been turning people into traders since 2005. Logic 247 has been making that journey a little simpler for the past year. Our weekly trading zones were coming up on a 10-year anniversary, December 14th of this year. Last week, which was week 52, there were a total of 58 alerts issued. 5 of the 58 never triggered. That left 53 actionable alerts. 35 of those reached the final target. 8 of them reached at least the initial target. 10 of them were stopped out. So 18.87, we'll call it 19% of actionable alerts were stopped out. Over the past year, again, we've been blessed to have similar numbers. The average over the last 52 weeks, 20% of alerts do get stopped out. That's the truth about trading. Last night, Globex Open began week 53. Long the S&P, long the Dow, long the NQ. Russell was stopped out. Crude was stopped out. Gold, short, found its target. Australian dollar found its target. Euro found its target. British pound found its target. S&P short found its target. The Dow, YM, found its target. Russell short found its target. NQ found its target. Gold found its target. Crude was stopped out. Gold stopped out. NQ found its target. And the S&P found its target. If I did my math correctly, I think there were 13 alerts last night. Let's see, we started with alert number 2408. 2408. We ended up on 25, so that should be 17, if I did the math right. 17 alerts, of which 1, 2, 3, 4 were stopped out. So puts us right at our average. If you want to take a look at these alerts, jump on the trial, go to eminitrainingschool.com. In the notes section, be sure and put a little memo. Put a little memo in the memo field that you're interested in not only the live training room trial in the morning. You get 5 days, 2 hours a day from 9:30 to 11:30 a.m. Eastern. You get to use our indicators, learn our methodology, ask questions, get answers, practice sim trading with the indicators, with the methodology. You also have access to the Concierge Trade Alerts that I just went over. You also have access to the Logic 247 alerts, which we just went over. 5 days, no credit card required, 100% free. Why do we do that? Because we want you to be able to make a well-educated, well-informed decision as to whether or not trading logically is right for you. Works for us. Maybe it's not for you. Maybe it's not your cup of tea. I can only ask, did your methodology give you these opportunities last night? If it did, congratulations. Maybe it gave you more. Maybe they were better. Again, congratulations. However, if your methodology did not deliver the goods, if you did not have a stellar evening last night, because the markets were ripe with opportunity, remember Einstein said the definition of insanity, I'm not calling anybody crazy, but Einstein did say the definition of insanity is to continue doing the same thing and expecting different results. Last thing you want to do is change your swing every time you step up to the bat. But if what you're doing, and you've been doing it for a while, is not providing you with an upward equity curve, I invite you, come hang out with us for 5 days. Spend time in the room. Our methodology is simple by design. Simple by design. You can learn this. Many methods are complicated, convoluted, and horribly expensive. Our methodology, it's not complicated, not expensive, and it's waiting on you right now. You could be seeing the world through completely different eyes a week from today. The ball's in your court. We love to have you as a part of the family. Come on down. Take a look. Remember, you'll also get a one-on-one mentoring session along with the 5 days of live market classroom instruction. Not theory, not historic charts, but live markets real time. The Logic 247 alerts are delivered around the clock as opportunity develops. An alert at 1 a.m. in the morning, Dwayne? Really? Really? Just because there's an alert doesn't mean you have to trade it. If you want to work 9 to 4, you can. It's a beautiful thing about trading. The market's open. When you choose to participate is entirely up to you. Now, when you shut the alerts down, when you turn the logic off because it's time to go to bed, the beautiful thing is logic doesn't stop working. The analysis continues. The alerts continue to flow. So when the alarm goes off and you wake up, brush the sleep from your eyes, stretch, and turn the logic back on, you'll see every alert that came through while you were sleeping. Some of them will probably have triggered, so now you can start watching for the second and maybe third trigger, because important prices in important areas are almost always tested. That's a fact, a market truth. Don't expect you to believe me. Put it to the test. Find out for yourself. That's the best way. Then you own it. There will also probably be some alerts that maybe haven't triggered yet. So you'll be able to watch those for the first trigger. So you got some you're looking for a second trigger. Maybe some you're looking for the initial trigger. So as you're sorting through your inventory, as I like to call it, see, instead of waking up and scrambling to find something to trade, you wake up to high probability inventory that you can sort through, pick and choose, decide based on the alert and the market structure. When you wake up and are ready to trade, you take action. Now, again, think about the difference. You wake up, you get in front of the platform. It's Monday. Oh, is it Monday? And you're searching, trying to find a setup. It's a whole different world when you wake up and have high probability trade setups pre-vetted, waiting for you to do what you do best, and that's trade. Stop looking, start trading. Logic 247, where opportunity finds you. Let's go to our good word for the day. Too often, we place God in a little tiny box. He's a big God, we put him in a little box. We've already figured out what he can do, what he can't do, what he's good for, what he's not good for, and then we just use him when we need him. Don't do that. God is unlimited. Our thinking, our preconceived notions, the way we were raised, often hampers what God can do in your life and the lives of those that you hold dear. Jeremiah 32:17 said, O sovereign Lord, you've made the heavens and the earth by your great power and outstretched arm. Nothing is too hard for you. Nothing. God can solve any problem. He's not bound by human limitations. He's not limited by time. God can do in an instant what might take you and I years. Psalm 147:15. He sends his commands to the earth. His word runs swiftly. He can speed the natural process of your healing. He can accelerate your harvest of blessing, so you'll be sowing with one hand and reaping with the other. Amos 9:13. Behold, the days are coming, declares the Lord, when the plowman shall overtake the reaper, and the treader of grapes him who sows the seed. The mountains shall drip sweet wine, and all the hills shall flow with it. God is also not limited by lack. God does not have a poverty mentality. When the Israelites left Egypt, God instructed them to ask for silver and gold. That's because the Egyptians owed them about 400 years of back pay with interest. And when they obeyed God, He broke their chains of lack, and they got back everything that had been stolen. Whatever the enemy has taken from you, God can restore it. Zechariah 9:12. Return to your stronghold, O prisoners of hope. Today I declare that I will restore to you double. God is not limited by the enemy. Moses told the Israelites in Exodus 14:13, the Egyptians whom you see today, you shall see again no more forever. How does God deal with the enemy's power? By increasing yours. Greater is he that is in you than he that is in the world. 1 John 4:14. The enemy took Jesus to the pinnacle of the temple, but he couldn't push him over. He can't push you over the edge either. Not if you use God's word and stand up to him. Don't run, don't hide. Stand firm on the word of God. And number 4, God just simply isn't limited by anything. But he does not respond to doubt. He made an axe head float. He made a donkey talk. He even made a corpse come back to life after 4 days. So, whatever problem you and I have, God can solve it. But you must stand on faith. Now, faith isn't what you believe, it's what you do with what you believe. First, you got to know what you believe. And now take a look at what you're doing with that knowledge. That's where you'll find your faith. I encourage you today, rise up and declare, God, nothing is too hard for you, and I'm with you all the days of my life. You know he wants to talk to you, right? Every day. As soon as your eyes open, your feet hit the floor, he's there. And we get so busy. We've got things to do, chores to attend to. Oh, the shirt needs to be ironed. Tires need air. I'm low on gas. Stress, trouble, consternation, which can lead to constipation, but that's another story. You with me? There's nothing too hard for God. I'm going with him. And that's our good word for the day. Once again, go to eminitrainingschool.com. That's where you'll sign up, register, and apply for our 1-week trial. That's 5 days in the live training room, full use of our methodology and indicators, and around the clock, 24/7, Emini alerts, bringing you opportunity as it develops in world markets. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.